Well, we get the difficult questions, Christine, but...
With great power comes great responsibility.
No, thanks. I think, I mean, we heard three different opinions or to-do lists on the Savings and Investment Union, and we get an idea of the challenge that is ahead, also in terms of the number of elements that are part of the Savings and Investment Union. And I think that might have been one of the key political challenges. We're talking about many different instruments, many different measures. And in the end, it might be a bit daunting, a bit too much of a task to take in one go. You know, it's this sentence of how does a mouse eat an elephant? Bite by bite, no? So somehow, or one bite at a time. And in this case, I think there are elements that have been put on the table over the past few years that are allowing us to take those steps or to have those bites. Let me focus maybe on one, but I'll make 3 points. So one is governance, and we all know that governance might have its advantages at the EU level, but also somehow sometimes it impedes or it really slows down when we want to have urgent actions or rapid progress. And on this, I think we've done quite a remarkable thing over the past year and a half, which is that we've put novel instruments on the table to be able to of course, align with the Commission intentions to go ahead in more flexible formats, in an agile way, in this coalition of the willing formats that are allowing us, and let me just give you one example, to, for example, make progress on securitization. So there is one specific proposal where the ECB is also helping out on the table, put forward by Germany, France, Italy, Luxembourg, and Spain to create an EU platform to be able to standardize, reduce the cost by sharing, actually, and therefore fostering a greater use of this tool, which actually, if we close the gap with respect to the US in terms of its share, it would free up at least 1 trillion in terms of banks' balance sheets. Just to give you an example of how things are moving in practice, thanks to these little changes in governance. Then another area where we are making progress, I think, is finding ways around the huge or the most difficult political discussions where there's a lot of political capital to be put in. We're talking about harmonization of difficult areas like insolvency, for example. So progress there with the regime 28 sort of examples or exercises would be more than welcome, where you have this mutual recognition that can help out and in this case, again, have a quicker way forward. Or even the use of technology, you know, using AI to be able to deal with the complexity of having fragmentation can also help us go forward and help our companies navigate these complex fragmented contexts. But let me also, when we talk about the domestic efforts, what we can do, there is an element also, for example, coming from domestic or national promotional banks, how they can help also with, together with the private sector, for example, with first loss absorption capacity to foster these elements of joint projects in this case, and the development of national or domestic markets. And then I heard the word Eurobonds, and then I have to step in because I think the element or the discussion around a true safe asset, the joint issuance of a size that can make a difference in terms of liquidity, in terms of depth of our issuance in euros, can make a big difference. And then I mean, it's a very easy back-of-the-envelope calculation. But you look at the G5, the big 5 countries in the Eurozone, how much of public outstanding debt there is, it's around 9 trillion. If you take the average cost of these 5 countries and you look at our safe assets, so to say, right now, which is Germany, and you do this very easy exercise of thinking that you could close this gap between this average cost and the German cost, you would free up 50 billion on a yearly basis. 50 billion. 50. Exactly, which is actually twice as much as we will be paying in terms of next generation costs from next year onwards. So again...
it's almost half of the EU budget.
Well, we're talking about 2 trillion, the EU budget.
No, per year, right?
Well, the MFF is 7 years, 2 trillion, but indeed...
50 billion per year.
50 billion on a yearly basis. Right. So for 7 years, that makes 350.
A quarter, yeah.
So again, it's just the dimension of the impact that these measures could have, and how I think at this stage these discussions are important to be put forward.
That is fascinating. Your mention of interest rates, and of course, it'd be a good thing to bring down the spreads further. President Trump, of course, said that the US should be paying the lowest interest in the world on its public debt. I mean, I think it's a fact that almost every, if not every, EU or Eurozone country probably pays less on its debt than the US government does. I mean, you could correct me, Madame Lagarde. But I turn to you now. You, of course, have the overview perspective as president of one of these united or common institutions for the Eurozone in this case. But you also have experience as a national finance minister, so you have seen how these things work at both levels. So I'd like to hear your view of how you assess the progress of how we're actually progressing on these many dossiers that were mentioned, and how optimistic we are entitled to be that things will get better.
First of all, the European Central Bank works fine.
Yes.
Thank you very much. And we are delivering on our objectives. So once I've said that, I was thinking of your previous questions. Why is that? Why is it that our three colleagues and friends are raising some specific areas where they would like to see progress, and why is there no progress? And I was thinking of two reasons, and I'll give you a couple of examples. First of all, I think we are the product of our history. And we have a history of having consolidated national regimes of each and every member states growing gradually over the course of time from, I'm thinking about the euro area, of course, because that's where the euro is used, from 11 to now 21 member states. And being the product of our history, the sequel of that history have, in the main, remained in place. And as a result of that, you have the issue of what happens at the integrated level, which could be made simpler and faster, and I can come back to that. But you also have the national level, where if you look at where simplification can happen, is a significant area. And with my governors around the table, we are 20, we will soon be 27, we are 27 with Bulgaria now. I said, don't forget that charity begins at home. And your Portuguese example is a perfect case in point, where there is allegedly harmonization, an internal market, and yet there are characteristics, specificities that have to do with the language, with the culture, with the history, with the territory, with the agencies that have survived that process of integration. So that's number one. So all of that is characterized by it being way too slow. Things are, Christian, you will remember, I think the first time you invited me to the European Banking Association in Frankfurt, and I gave a speech on Capital Market Union. That was more than 6 years ago. And the two of us were in complete agreement on the key points where we had to move and we had to deliver. And it is now beginning to happen. And I'm so pleased that on securitization we have made progress. Absolutely. We're not completely there where you would like it to be, but it's progress. But the single supervision, which in my view is so important, will be proposed in the first quarter of 2026, has been announced already. But what I'm trying to get at is, why is it way too slow? And what can we do about it? Because from the moment we talk about it, there is some work of consensus building between the industry, the policymakers, the political leaders, the members of parliament. Then there is a proposition that is put on the table by the Commission, which also iterates and discusses with the lobbyists and with the industry and lots of people. And then it is, passed on to another body, or generally two bodies, because it's a trilogue discussion that takes place. And you have the European Council, so the leaders at a lower level, Coreper, ambassadors, whatever, and you have the Parliament. And then these three come together, Commission, Council, Parliament, and before you get to something that is actually implementable, in the hope that it doesn't go to the European Court of Justice for challenges, a lot of time has elapsed. I'll give you a very, very clear example which is dear to my heart. The digital euro, which I'm not surprised nobody mentioned, but which we believe is not so much in the industry's interest, although that's debatable, but definitely in the public interest for multiple reasons. Well, I started with that when I joined the ECB more than 6 years ago now. It will come to Parliament for hopefully some vote in May or June, 6.5 years later after we started the work. So that gives you an idea of how long we take to come to deliverables. So I have a suggestion. I think that the momentum has changed a lot, and I think there are more and more the leaders, the industry, the policymakers are on the same page, and when you have sort of common adversity or difficult situation that you're facing, it brings you to that momentum. I think we have to look at all ways of transgressing and progressing. And I think that what Carlos was saying about the coalition of the willing is a good example of how eventually we transgress.
Indeed.
It's not the normal way to conduct business in Europe. And yet, with your initiative, rallying some of the key players, it's probably going to move the needle less slowly. I observed, and I was in the European Council room when it happened, how the approach has changed in relation to majority or unanimity. Okay. So many things in Europe, we've been told, ever and ever, are by unanimous consent. And if you have 1 or 2 outliers, it's going to block the process. Well, guess what? For the issuance of the 90 billion euros to support Ukraine, the member states decided that they were going to go with qualified majority voting. And as a result of that, the 3 outliers who did not want to participate in the process were left to the side, did not participate, and the others are going to share the burden that they should have borne. So I think there are ways, even within the parameters of the treaty and the secondary legislation, without having to change the treaty, to progress the cause for which there is common will between industry, policymakers, public interest, in the current circumstances that we are facing. I want to go back to one point that Valérie has mentioned, which I could not agree more. And it touches on the sense of risk-taking that I think Christian also referred to. Financial literacy. I grew up a little bit in the United States, and maybe some of you in this room have as well. You learn the sense of risk-taking much earlier in your life than you do in certainly most educational system in Europe, from what I have seen and what my central bank governors from around the euro area are telling me. It is time to change that. Yeah. And I'm very proud that the central bank of the euro area have decided to embark on financial literacy, advising, advocating, propagating, using the resources that they have, using the staff that they have, in order to make sure that people understand better what is risk-taking, what is a variable interest, what is compounded interest, how you manage a budget, things that are pretty basic for many, but which are not very well known by the majority of people. This is a bit of advertising now for what we're doing, we are focusing on women, because it's a general observation throughout Europe that financial literacy is less developed in the women's community, and we have now for the second year we're going to use March the 8th, which is the International Day of Women, to focus on financial literacy programs and how much has been done, how much has progressed, and how we can go further. It sounds a bit, sort of trivial or mundane. It is not. It's really, really important. So I'm so pleased that you mentioned it, and I hope we can deliver.
Can I just
Please.
add one thing to this argument that Christine was saying, which I think is key, and has become even more relevant today when our children, teenagers, are exposed to tons of information. And for example, there are surveys done at the ECB level for all euro area countries saying that around 60% of our citizens know about savings account, but 84% have heard about crypto. So again, it increases the need for these to come very early in, 12 10, 12 years old. I think it's a great time to really start understanding basic concepts, but also risks associated to some of these. You have fraud also, scam associated to financial instruments. So we are in a different world than we were, and the need for these has I think, substantially
I
increased.
was going to say what they hear about crypto probably isn't always correct. I'm just going to take the opportunity that was opened by President Lagarde and mention that the FT also has a financial literacy charity.
Yes.
FT Flick. So please look it up and please contribute generously.
Patrick Jenkins is doing a great job with that.
Exactly, yes, our deputy editor. So we're very proud of that and we completely agree. Annette.
Yes, I also completely agree, but we also need more. Maybe it's a more paternalistic approach, but even when you are teaching all the principles of risk-taking and financial management of your own household, there is still reluctance to do savings for the longer period, for your pension. So I would also add to that auto-enrollment and having systems which are a bit paternalistic, as I said, but just also from a younger age do the savings, especially for women. Since in the Netherlands, the pension gap for women is 40%. So women have 40% less pension compared to men. And that is growing at this stage. So financial literacy, yes, but also something like auto-enrollment and funded pensions from social partners.
Is it because of part-time work for women in the Netherlands?